Hey guys, Adam here from directiontrader.com. Let's go over a topic today that I've had a few questions here recently from newer members in the trading room. Kind of call this Q&A Wednesday, if we will. The question, is evolved around the daily chart. So basically, how do we use the daily charts when trading such short time frames intraday? And it's pretty simple, guys. It doesn't matter if you're trading a daily chart, a 15-minute chart, or a 233 tick chart. You mark up the chart kind of the same, and then whenever you're coming into support or resistance, you kind of trade it the same. Let's quickly look at a daily chart here. This is Crude. I'll also show the S&P just to show you a couple different markets, but the concept is pretty similar on all time frames. As you can see here, we have different price levels marked up on this chart. This is a chart I use in the trading room, so this is what I use every day. And as you can see here, I obviously have a band of support and resistance that comes through here. Now that band on the Crude is 97.50 to the 98s. So that area has acted not just here recently, but also well back in history as kind of a magnet for price, and then somewhere for the price to actually bounce off of. So as you see here, I do have that marked up, as well as 100, which is a big round number, pretty common, in the 95, and then so on and so forth. So how you mark up these charts is pretty standard, but how do we use them from an intraday standpoint? Now, I don't usually look at this much of a view. As you see here, let me zoom out here. I don't usually look at that much of a view. This is about what I look at from an intraday standpoint when I'm actually in the trading room. So I'm more focused in on what's going on in the last 2 or 3 trading bars. That is a little more significant to me than actually looking at the bigger picture, because like I said, this is a video on how do we use the daily charts from an intraday standpoint. Now, we do want to be well aware of where the support and resistance are on the dailies. So in this situation here, as we had been pushing down, we were about in this range, and I was getting questions about where do I see the price going right after the first of the year, and I said, well, the only magnet I see is the 95, and we had broken the 95, so the 92, a retest of the lows. And that's sure enough what happens, guys. The markets like to retest these price levels and then find buyers or find sellers. They just like to retest stuff and then bounce. If they get some follow through, they'll follow through. If they don't, then they tend to retrace and revert back to a price that, revert back to a mean, I like to call it. So basically here, and then obviously we got a little bounce. Where we end up at? Right back at the moving average, 21 period moving average, right back at the 95s. So basically intraday, whenever we were trading back up here towards this 95, we were bullish all the way from the bounce off the 92, bullish intraday all the way up until we got near this 94.50, all the way up to 95. Then we kind of take the foot off the gas. Take the foot off the gas just a little bit, and then look for rollovers, look for ways to sell that market. Obviously, it didn't happen here. From an intraday standpoint, we got a few shorts off that price level. Just a little bit of some smaller wins, some smaller trades, and then obviously we popped right through. Once we pop through 95, we continue to search. The next area would be the 50 period moving average. We got 100 ticks worth of movement that we could trade to the upside. Wait for that, take the foot off. If it gets broken, then we wait for the very next level, all the way up here at 97.50. So we basically are going stage to stage when we're trading intraday. I know there was a lot of I had a lot of chicken scratch here on that video, but basically use the daily price levels on an intraday standpoint to not necessarily trade off of, but maybe help you put your foot on the brake a little bit. Stay away from trading. Say we're trading long here, we get above the 95. We're getting up near this 97.50. Maybe take the foot off the gas pedal a little bit and maybe look to see if the market wants to start rolling over by using a smaller time frame. And if you can get a rollover, then obviously you're going to try to sell this market. But right now, if I were to do an analysis right now, basically I would say we are stuck in here between the 97.50s, as we've retested 97.50s for 5 trading days in a row now, 6 trading days in a row now. So that is very significant. We also are in contact with that following trend line, as you see here. And not only that, we have the 200 and the 100 exponential moving average, all in this exact same price level. Pretty significant, I would say so. We should be able to see some reaction off of this, whether it be a pop to the upside or a pop to the downside. We'll be ready in the morning. My morning analysis is probably going to talk a lot about this price level, and we'll see where we're at come the morning time. That's still a nice 12 hours away from right now. But if we start to sell off, we're obviously going to look to sell off down to this 96.30 level. Now that 96.30 is yesterday's low and the 50 period moving average. They converge at the same area. And if you want to get even more detailed, you can zoom in here or go to a smaller time frame, and you can see that 96.30 is not only going to be yesterday's low, or actually today's low, sorry about that, the 50 period moving average, but it's also going to be the halfway back from this low to this high. That's halfway back. Then 50% pullbacks tend to be magnets for a lot of markets. So if we do not get a pop above these highs here tomorrow, we're going to look for that 96.30 to be somewhat of a magnet for the markets. So that's a nice way to look at the markets using a daily chart from an intraday standpoint. Let's hurry up and look here at the S&P so this video doesn't get too long, but yet it's still long enough to get some information out of. Same things marked up here, guys. As I open up this chart here a little bit, we'll get a little bit bigger picture for you. Kind of treat it like any other chart, but then from an intraday standpoint, we can see obviously we have this price in here that has acted as support and resistance for quite some time. So as we are hugging it right now for 1, 2, 3, 4, 5 days now, 5 days in a row now, we're hugging this level. So what's happened whenever we bounced off this level? We bounced right up to what? The 50 period moving average, and then we found some sellers up here. So just like the crude market, from an intraday standpoint, we want to make sure we're aware of these big numbers that are acting on the daily charts as support and resistance. Now, the only way I will be getting short is if we can go ahead and break through the low of today's candlestick, and then I don't have a lot of room to trade back down here to the downside. As you see, we are coming into some support down here at 93 or 53.5, and the low of today was 64.5, 64.25. So there is plenty of room there. There's still 10 ticks or so, or 10 points or so of movement, which on the S&P you can have a nice trade. But mind you, I'm going to look to short right when it gets below today's low, and then I'm going to look to basically take the foot off the gas whenever we get down to retest this prior low down here, which comes right in here at the 54s. Right in that area, give or take, a few ticks in there. So I hope that makes sense, guys. So basically, I'm going to be a little bit cautious until we can actually break through these lows. And then if we're not able to break through the lows by using a daily chart, finding how to trade intraday, I'm going to look for the opportunity to rise on up. And we got plenty of room to trade here to the upside until we do what? Retest this area of resistance. So intraday, we're going to be able to get a lot of slop and chop inside of here. Use a smaller time frame. Use the momentum of the trading day to trade. But be very aware that if we're trading down in this range, don't try shorting anything new into these lows. I'm not going to try shorting anything new into these lows because they've found buyers once, twice, 3 times in this price level and have turned the markets back to the upside. So basically, take your foot off the gas to the downside in this area, wait for a break of price structure, then trade it to the short side. If not, plenty of room here to trade to the upside from an intraday standpoint. And one thing I want to leave on this video, just to talk about price levels. That was one of the questions, what price levels you'd use. And it's pretty obvious. They show you every single day what price levels. We have previous day's high, previous day's low, previous day's open, and previous day's close. Those are the 4 significant levels I will look at every single day, being the highs and the lows of the previous days as the top 2. And then also, don't ever hesitate to watch out for these pullbacks. These, I like to use fibs, so anywhere from a 38 to a 62% pullback is a good level. So if anytime you see these pullbacks on these big candles, these big down days or these big pushes, wait for a 50% retracement and then the market to roll over. You can see that over and over and over and over in time. So looky here, you got a nice little push up here. I know you wouldn't be looking at this, but you would have a 38% level came right in here. I am very familiar with this pullback. We have the 21 period moving average, and we have this price level coming through here for this pullback. Now, I know I didn't touch it perfectly, but you wouldn't be trying to sell this all that much going into that level. You're going to be waiting for this bounce. That thing kind of happened right here too. So as we pulled back down, had this little pop back to the upside. We had it retest what, the 50 and a 50% pullback here. So it's not against the rules to use a like a Fibonacci pullback using a daily chart, even when you're trading intraday, because all you're looking to do is find that area that maybe you should take the foot off the gas and be a little bit more conservative. Basically, if you're coming into previous day's high, maybe take your foot off the gas and stop buying into that and just see what the market's going to do. If it's going to roll over, you can start trading to the downside. If it's going to chop a little bit, which it will, most likely, maybe it'll break higher. Then you can get an opportunity to the upside. But it's almost trading suicide from doing it over time to continue to buy and sell into them price levels, into them previous day's highs and previous day's lows. So if we do get a pop up here and we start to roll over, sell it as much as you want down to the downside until we get into this area. Then maybe take your foot off the gas and just wait to see, is this market going to reverse back to the upside, or is it actually going to break them levels and give me more opportunity to the downside? So use them previous day's price levels to your advantage, and try to stay focused on what exactly has happened in the previous couple days to see whether today is it's a good idea to trade long or short using a shorter time frame. So I hope this made sense, guys. I know it was. Some of you may second guess it a little bit, but if you come, you can see me do this every single day, and I know it becomes much more clear as I have several members who are completely on board and completely understand our market analysis on a daily basis and find a lot of value in this. So that's it on this, guys. If you have any questions on this video, please write me. Please make a comment so we can go ahead and talk about it and I can clear up any questions. But I just wanted to make a nice video here showing you exactly what I'm looking for whenever I'm using the daily charts from an intraday trading perspective. As you see here on this trading grid I have for my trading room, I do have a daily, a 15-minute, and a tick time frame here, which we use intraday. And I will make more videos talking about the 15-minute and so on and so forth, how I use it as an anchor chart, I call it. But this video is on the daily charts, how to use the daily price levels to trade your intraday time frame. So that's it for me today, guys. I hope you enjoyed this video. If you have any questions, please get back to me, Adam@directiontrader.com. If not, you have a good day.